Okay, so we're starting the tracking video on the daily time frame as the weekly bias really hasn't changed much, if at all. So if you can recap from last week, what we were around these sorts of level around 12th of January. Um, yeah, we were around the 12th of January, 13th of January last time I made the video, and I was expecting price to push to the upside past these levels of 1831 to potentially reach this level of 1850, 1848, around that sort of level, around this wick, this huge bearish candle here to the for the potential collapse to the downside. Um, so now let's look at the slightly intraday time frame at 4 hours. So we're looking at intraday 4 hour level now. We're seeing a consolidation around these sorts of levels here. Let's draw around let's draw a box around that, and then even more specifically on the hour time frame, we can see some sort of support. Some sort of resistance around this level here. Support resistance there. Yeah. And looking back up the daily actually to look for some targets and stop losses. So first target we can potentially have nice and easy just below these sorts of structures right here, right? These sorts of structures where the push and the rally started, so therefore we can expect a lot of buyers are going to be around these sorts of levels. We can trap their liquidity. This could be seen as a liquidity zone for us here. So we can expect price to collapse back down here to grab some sort of liquidity to continue the next move, either up or down. And if that gets broken quite impulsively, we can look to go to this next sort of level around 817, 85, 84, something like that. Yeah, around that level. So let's go back down to the hour time frame. Hour time frame now, what are we looking for? So we can see that there's going to be loads of sellers looking to sell here. It's that, there, and there. Major support. Major resistance around this level. Loads of sellers looking to sell, and therefore loads of liquidity around these sorts of levels. Right? Cool. Um, Now what we can expect is for price to break this liquidity zone to go up to the next resistance around 1850 for a psychological push, psychological level around 1850, a collapse to continue to the downside, and that's what we're going to be looking for. So nice and easy, looking for price to break this zone over here to get the fuel required to continue the move to the downside. As you can see, the weekly was a bit bearish, was very bearish actually, as you can see here. Tried to rally to the upside, and sellers took over. Tried to rally to the upside, sellers took over. Tried to rally to the upside, sellers took over. Tried to rally to the upside, sellers again took over. So yeah, that's what we're looking for. Going back down again, the hour time frame. Potential stop loss we can look is just slightly above that sort of level of 1851. So 44 hour. Whereabouts is it? Here. So some sort of resistance level we have is there. Style extend to the right. There you go. That sort of level for resistance. Once price reaches that level, we can kind of do something like this. Stop loss, a small stop loss, and then collapse to the downside for a 1 to 5 risk to reward. Not a bad idea, I'd say. So we'll just wait and see what gold does. As you can see, currently gold is pushing to the upside, a decent rally to the upside. These lows have not been broken yet, so again, buyers are also buying here. So another source of liquidity here where they have to continue to sell back their positions. But tapping this liquidity zone here, would cause the price to push up because sellers will have to buy back the positions, causing a rally to go up to 1850. 1850, a huge psychological level where sellers and big banks should, in theory, start to sell off gold back down to 1800, 1807, which is again where the move started. So loads of buyers bought around here to push this level right here. So yeah, that's what we're looking at so far, and we'll see what happens for gold in the next coming weeks.